If you ever wanted to learn about the double entry accounting system, now is the time, because we're going to be going over that in this tutorial, and it's actually going to lead us into a video series about the accounting cycle, which is a really important video series that we're going to be covering. It's going to cover all the steps of the cycle and why they're so important. And I thought before I'd actually talk about the double entry accounting system that I'd give you a brief little explanation about what the accounting cycle is. So the accounting cycle is exactly what it sounds like. It is this, I can draw a better circle than that. It is this cycle in which it has various steps which are all going to be performed sequentially. There are things like posting transactions and recording them, creating or posting to the general ledger, creating a trial balance, and ultimately we're going to be preparing the statements, the financial statements like the income statement, balance sheet, which are essentially the point of financial accounting, because we want to create these financial statements that are going to have all this information regarding our financials, and they're going to be communicated to users like maybe investors, people that are looking to invest through the stock market in your company, maybe private investors, maybe a bank needs your financials for a loan, and so on. So this cycle is going to be it's going to be a various amounts of steps that we're all going to go over in the next video, and all of these steps are going to be repeated once the cycle is finished. So once it hits its end, we're going to repeat all the steps. It's kind of like that elementary cycle you learn about in grade 1. Reuse, reduce, and recycle. Help save the environment. Except, of course, this is a little bit more elementary, and it has only 3 steps, and you learn it in grade 1. So, moving on, we're going to be talking more about the cycle in the next tutorial, and now let's talk about what the double entry accounting system is. So, the double entry accounting system used to actually be called the double entry bookkeeping system, and that's because we did used to perform everything within large books, and it would take many hours for accountants to post all these entries, debits and credits, and debits and credits, and debits and credits, and they would fill up all these books of entries to record all the transactions of the company, ultimately creating these huge tomes of information. And that obviously became burdensome and very tiring, so we ultimately created computers which make things very accessible, easy, and we're able to compile loads of information, and that's essentially how technology went, which is great. And essentially that's why we just call it the double entry accounting system now, because we hardly ever use physical books anymore to record transactions. We'll use accounting information software. So the first thing we're going to notice is that the word double entry accounting system, the first 2 words are double entry, and the reason for that is because we're going to be having at least 2 entries for a transaction. One of those will be a debit entry, and one of those will be a credit entry. And I know you're saying to yourself, what is a debit and a credit? We'll be getting to that in the next video. I just wanted to really make it evident to you guys that you're going to be performing at least 1 debit and 1 credit entry. So let's say if we purchase a plant, we're going to be receiving an asset. So receiving an asset, which is a plant, and we're also going to be giving up an asset. Let's say we pay for it in cash, which is unlikely, but to keep it simple and basic, we're going to use this as an asset. So we're giving up an asset, we're giving up an asset down here, and we're attaining an asset above. And one of these accounts will be debited, one of these accounts will be credited. Which one? You'll actually find out in the next video when we talk about debits and credits, and understanding which one you will debit and credit. Alright? So the main point is that for every transaction we're going to be having at least 1 debit and 1 credit entry. The second thing is that this system of having debits and credits and at least one debit and one credit is that the debits and the credits will equal each other, and if they do not equal each other, then there is a blatant error in which you're going to have to go back and search for. And also, I just wanted to note that I should actually get rid of this because I wanted to post this little asterisk, and that's just because the debits and the credits equal each other does not mean that the books are error-free. And there's a number of reasons why, and that's some reasons might be, for one, we could have a duplicate entry. So say we created that transaction for purchasing a plant using cash. That transaction was perfectly valid. Now, if we made the exact same transaction, that would be perfectly valid as well, but those would be, or that would create a duplicate entry, and it wouldn't be right to have that in our books, and that error would not be caught by our error checking tool, which is looking for the debits equaling the credits. I know this all sounds kind of bizarre at the moment, but you'll actually come to see what debits and credits are all about in the next tutorial. And another error can be that we actually forgot an entry. This will not affect the debits or credits, and it won't be caught by this tool. Another one might be the wrong accounts are being debited or credited. So of course the debits and the credits will remain fine, but the wrong accounts will have been debited or credited, creating another error. So it really takes a lot of practice to actually look at all the errors within accounting and make sure that everything is accurate and complete. So that's basically what I wanted to talk about with the double entry accounting system. We're going to be talking more about debits and credits in the next tutorial. Make sure to subscribe, and I'll see you in the next one.